In business news now, Asian equities tumbled in trade as the coronavirus outbreak shows little signs of easing. The rising number of cases outside of China is stoking worries over further global supply chain disruptions and fueling demand for safe haven assets. Korean shares took the brunt of the selling, the benchmark KOSPI losing almost 4%, its sharpest one-day fall since October 2018. Heavyweight Samsung Electronics led the way south, shedding about 4%, while the Korean won hit a 6-month low. Korean Airlines and Asiana Airlines both dropped over 6%, and they've announced plans to suspend flights to Daegu, the country's fourth largest city with the largest number of coronavirus cases. The Singapore market closed 1.2% lower after core inflation for January eased to its lowest since December 2015. In the flight to safety on worries that the worsening epidemic will dent global growth, the yen has been left behind, although gold is gaining ground and crude also down, with investors worried that demand for oil will be hit. European markets have also come under selling pressure at the start of this new trading week, with Italian shares among the hardest hit following the fourth fatality from the outbreak. The FTSE MIB down more than 4%, the FTSE 100 in London, CAC 40 in Paris and Frankfurt's DAX all down by more than, as you can see here, 3%, close to 4%. The political upheaval in Malaysia has rattled investors. The benchmark FTSE Bursa Malaysia closed almost 3% lower after the resignation of Prime Minister Mahathir Mohamad. The ringgit fell almost 1%, its steepest slide in 3 years, to its lowest level in almost 6 months. The KLCI had been on a downward trend since 2018 general election. It shed more than 17% in almost 2 years, falling more than 10% in just the past 12 months. Analysts attribute the decline mainly to the country's economic woes and the lack of foreign institutional participation. The ringgit hasn't fared any better. It's fallen about 6% against the dollar since the election, and experts see more pressure on the currency in the coming days. The economy under stress as well. Fourth quarter GDP grew just 3.6%, the weakest pace in a decade. And for the full year, growth was 4.3%, the lowest level since the global financial crisis. The country's central bank attributes the decline mainly to external challenges such as the US-China trade war, falling commodity prices due to supply disruptions, and slower public investment activity. To help revive the economy, Bank Negara unexpectedly cut its key interest rate to 2.75% from 3% last month. But despite that support, economists see GDP growing between 3.5% to 4% this year, missing its original 4.8% target. China's top economic planner is confident that the growth targets for this year can be achieved. The comment has come from the Secretary General of the National Development and Reform Commission.
这次疫情对经济社会的影响是短期的，总体上是可控的，不会改变我国经济长期向好的基本面。随着疫情防控成效的逐步显现，在政策措施的有效对冲下，我们有信心、有能力，也有条件将疫情的影响降到最低，保持经济社会的平稳健康发展。
While small and medium-sized enterprises have faced what he calls substantial difficulties, he says measures are in place to keep the impact to a minimum. Tax cuts and other measures have been promised to help companies recover from the coronavirus outbreak, with officials saying they are looking at how best to channel aid to businesses. President Xi Jinping says China will step up policy adjustments to help cushion the blow on the economy. China's economy grew by 6.1% last year. The growth targets for this year have yet to be announced. And like the rest of Asia, declines have also been seen in Shanghai and Hong Kong. Chinese onshore yuan weakening against the US dollar. It's trading at just over 7 to the greenback.